Hey everyone, and welcome back to Wealthy Brains. American billionaire hedge fund manager Paul Tudor Jones has recently become more bullish on Bitcoin. He declared the cryptocurrency the best hedge against inflation and compares investing in Bitcoin now to investing in early tech stocks like Apple and Google. "I think we are in the first inning of Bitcoin and it's got a long way to go," he said. Paul Tudor Jones explained why he is more bullish on Bitcoin now in an interview with CNBC's Squawk Box on Thursday. Jones founded Tudor Investment Corp, an asset management firm headquartered in Stamford, Connecticut. He became famous after predicting and profiting from the 1987 stock market crash. The billionaire investor caught the attention of the crypto community back in May when he revealed on the show that he had invested about 2% of his assets in Bitcoin. Now, 4 months later, Bitcoin's price has rallied more than 46%, and there has been a string of bullish news, such as the recent announcement by PayPal to support cryptocurrencies. Jones was asked if these developments have changed his BTC investment decisions, particularly whether he was buying more BTC or selling some. He clarified by reiterating his reason for liking Bitcoin and recommending to his clients early this year. Back in March and April, it became really apparent, given the monetary policy that was being pursued by the Fed, the incredible quantitative easing they were doing and other central banks were doing, that we were in an unprecedented time, he explained. Noting additional problems brought about the COVID-19 pandemic, he said, "One had to begin to think about how you defend yourself against inflation." The founder of Tudor Investment Corp continued to explain that he recommended Bitcoin as an inflation trade like gold, copper, the S&P, GSCI commodity index, and being long the yield curve. He then outlined why Bitcoin is better than other assets for hedging against inflation, examining the overall market caps and characteristics of all inflation trades. He said that Bitcoin has very small coterie of people investing in it. It was portable, it was liquid, had a variety of characteristics that made it a great inflation hedge. While Jones pointed out that the one thing it didn't have integrity and long-term staying power. He emphasized that every day that goes by, of course it gains on that. It gains on credibility and integrity. The billionaire hedge fund manager admitted that he did not appreciate what Bitcoin had when he said he invested about 2% in the cryptocurrency back in May. "I didn't appreciate it, and now I know what it must feel like to be a tech investor. Remember, I don't really trade individual stocks," he conceded. Bitcoin has a lot of characteristics of being an early investor in a tech company, like investing with Steve Jobs in Apple or investing in Google early. Jones further revealed, "I've got a small single-digit investment in Bitcoin. That's it. I'm not a Bitcoin flag bearer." After recommending Bitcoin and revealing his holdings in May, Paul Tudor Jones said he got besieged by God knows how many different people on Bitcoin, admitting that he did not know it at the time. He said, "But what I learned was, and what I was so surprised by, is that Bitcoin has this enormous contingent of really smart and sophisticated people who believe in it." He explained that Bitcoin has supporters crowdsourced from all over the world who are dedicated to seeing Bitcoin succeed in it becoming a commonplace store of value and transactional to boot at a very basic level. The longtime trader believes the unprecedented quantitative easing from the Federal Reserve is setting the stage for inflation to make a grand comeback. "The reason I recommended Bitcoin is because it was one of the menu of inflation trades like gold, like TIPS, break-evens, like copper, like being long yield curve, and I came to the conclusion that Bitcoin was going to be the best inflation trade," Jones said. Bitcoin has fully rebounded from its coronavirus lows in March. The digital coin on Thursday hit its highest level since January of 2018. The trade at around $12,900. The founder and chief investment officer of Tudor Investment Corporation also compared investing in Bitcoin to putting money behind some of the biggest tech companies like Apple and Google. The cryptocurrency, which scaled a record high this week, is on a crazy rocket ship ride that's set to go higher, according to the veteran investor and trader. While Jones doesn't consider himself a cryptocurrency expert by any stretch, he told Yahoo Finance that he expects the digital coin will be substantially higher in 20 years. On Thursday, Bitcoin, which has surged 113% since May, was trading north of $19,300 with $359.37 billion market cap. In a world where you've got 90 trillion worth of equity market cap and God knows how many trillions of fiat currency, etc., etc., it's the wrong market cap. For instance, relative to gold, which is 8 to 9 trillion. Jones said in an exclusive interview, "I'm going to assume that it's the wrong price for the possibilities that it has, and I'm going to assume that the path forward from here is north." He added that Bitcoin reminds him of internet stocks in 1999, when the internet was in its infancy. No one knew how to value it because of the world of possibility that lay ahead. Back then, few had an idea of how the internet would play out, as some companies crashed and never came back. Others, however, ended up as dominant worldwide players. The fastest horse. In a May investor letter, the Tudor Investment Corp's founder and CIO provided a lengthy discussion in an investor memo on how Bitcoin can serve as an inflation hedge, as monetary expansion funds additional debt, which was already sky high before the pandemic hit. At the time, Jones ranked Bitcoin as number 4 on his list of inflation hedges, calling it an investable asset that falls into the category of a store of value and is semi-transactional. He noted that his profit-maximizing strategy was to own the fastest horse among the cryptocurrencies. Meanwhile, Jones is certain of the digitization of money in the future, especially as more central banks move forward their own digital currencies. He predicted that current generations and sovereign governments will eventually use their own versions of crypto. They may have their own digital currency, whatever, they'll be very commonplace at that point in time. Cash may be gone, he told Yahoo Finance. If Jones had to guess, he thinks the future of Bitcoin is going to be a lot like the metals complex. If Jones had to guess, he thinks the future of Bitcoin is going to be a lot like metals complex, where you have precious digital coin. Bitcoin is the first crypto first mover in the world that's so compressed. It has that historical integrity within digital currencies that we'll always have. And again, because of its finite supply, that might be the precious crypto, he added. What's more, the future might lend to more transactional cryptocurrencies along with the sovereign's digital currencies. While it's impossible to know what the next 10 or 20 years will look like, Jones said if he had to take a position on it, it's going to be the brand name, which is Bitcoin. He also expects the sovereigns will fight back against cryptocurrencies, similar to what happened with gold in the 1930s when the federal government seized it. We were all actually on the gold standard because of its neutrality, and then of course we came off, they banned it, but it had appeal. The investor explained, "It's hard to understand what the future of a currency, any particular currency, is going to be," Jones added. That is all for today, folks. Would you like to add anything? Let us know in the comments section. If you enjoyed this video, then be sure to leave a like and subscribe if you are new, and I'll see you in the next video.